Let's jump into Bill here.
We got Bill
Bill's got
Freidman with Freidman Thompson and Company CPA, tax expert extraordinaire, here to share with you what's really important, the stuff you need to know regarding taxes. Taxes for your home, taxes in general, tax advantages, and also, Bill, don't you have some good news for us?
We do have some good news. We'll get into that a little bit later as far as the types of income that people out there think they're going to have to pay a lot of taxes on, and in reality, very few people actually do pay taxes. And I'm talking now about cancellation of debt income, which is the hot topic today on foreclosures and short sales. And we'll give you some good news in that area and some timely news for you to start thinking about if you're going to make this kind of decision, because there is a deadline coming up. But I believe we're going to get into that a little bit later in the show.
Yeah.
But right now, why don't we talk about what a great time to buy homes. I don't remember a time where interest rates were so low and prices were low at the same time. And if you're
1960s, I think?
Yeah, probably, huh? And I know some listeners are probably going, well, I bought my home several years ago. It's not a great time to own a home right now. Maybe so, but it's a great time to buy a home right now. And if you're a new home buyer, and possibly even somebody who already owns their home, maybe purchasing a second home, it's a great time to buy because of the power of the tax write-up of mortgage interest and real estate taxes.
So, you know, and we've talked about it quite a bit, and what I'd like to quantify is if I'm renting right now, and let's just say, for argument's sake, I'm renting for $1,500 a month. Does it make sense to buy a home? Is it really a valuable tool? Is the tax deduction worthwhile for me?
Absolutely. With mortgage interest rates as low as they are and prices as low as they are, you can afford to buy a home probably nicer than what you're renting now, and your net costs come out in most circumstances less than $1,500 a month.
At the same time, making a bank account for yourself at the end of the year in your tax return, right?
Correct.
Yeah.
By writing off the mortgage interest and the real estate taxes, your net after-tax cost oftentimes comes out less than what you're renting. And at the same time, you're building a nest egg because you're building equity in the payment down of your principal reduction, and the equity goes up as the property values go back up.
And they will go back up.
I know everybody's saying, I haven't seen it go up in a while, but it will go up without a doubt. And
We're
we're in
waiting
Southern
for the
California.
bottom of the market to hit. Oh, who knows when the bottom of the market is?
Well,
now.
you know when the bottom of the market hit, it's too late.
Too late, exactly.
Because you know it's already on its way up, and you're like, oh,
Exactly.
but it doesn't matter. I mean, bottom line, if interest rates go up, even 0.5%, you just lost potentially $20,000 to $40,000, $50,000 in purchasing power. So for you to wait, just 6 months hoping to hit that bottom, and the interest rates go up, you really didn't save a thing, did you?
Well, not only did you not save a thing, but here's the thing that I try to look at is, what if I lost a bedroom because I waited? Or what if I lost a swimming pool because I waited? And I actually lost a true amenity rather than just save an extra $100 or something.
Where do you find the bedroom and the pool that you lost, Gino?
Well, $40,000 can be the difference between an extra bedroom or a pool.
Or both.
Or both. Your wife says you do lose things. I'm about to say, you lost a pool in a room?
So, Bill, one of the things you mentioned net, and I think that one of the things really important is you need to see a tax professional so you can adjust your withholding allowances when you buy a home. I think it's one of the #1 mistakes people don't make, and then they have a difficult time paying for that home because they've never made the adjustment.
Exactly. Many of my clients will come see me prior to purchasing their home, and just to get the advice on how much money they can actually save on their paychecks by planning for the tax deductions of real estate and mortgage taxes, and actually freeing up more money in their paychecks each month rather than waiting for the tax deduction at the end of the year. You can actually get that tax deduction every week or month when you get your paycheck just by reducing your
to help you with that payment.
Exactly.
You don't have to wait till the end of the year.
Exactly.
I mean, what's really nice is now when they own a home, they actually look, it's a lot more pleasurable experience when they see you at the end of the year now that they have this beautiful tax write-off from interest and the property taxes they write off, correct?
Correct.
All right, very cool. Well, we're just touching